Okay, reading volume histogram, identifying ultra high volume, high volume. I think you know about this. Do you know how to do it?
Yeah.
I told you before as well. These are the ultra high volume, that is side. Anything lower than this moving average is actually low volume. Anything touching this moving average is average volume. Okay, this is high volume. This one is the ultra high volume, ultra high. Got it? The V shape. It is from the V shape.
Yes, correct.
V shape, ultra high, ultra high. This is high volume, high volume, high volume. It's all high volume. But as we go this and the next part is here. This one we know is the ultra high. Got it? This is here. So ultra
Yep.
high volume will always stick out. For example, I know it will always stick out. I know this was a high volume. This was an ultra high volume. And then the market reversed. What does it tell me? At this point, I got a high volume and then the market reversed. So it means I'm looking for the test. Once the market come near it, and then I can go for another. Now here I can take a confirmation and take a long because I know this ultra high volume was actually from the buyers, right?
Yep.
This is what
Okay.
got it. And understanding basic, okay, reading the market bar by bar, micro. This is very important. Understanding volume, HSC bar spread, structure during uptrend, downtrend, accumulation. Okay, what are the characteristics in uptrend here? Remember that. I explained you previously as well. We have a characteristic of uptrend. Now, if I want to define an uptrend, how would I define? Okay, let's suppose we have this one, uptrend here. Okay, this one is what? This is low, initial low. Okay, this is initial high. Got it, right?
Yep. Okay.
Okay, this is higher low. This is higher high. This is higher low. Got it? This is uptrend, basically. So within uptrend, what you will notice always one. This is impulse wave. This one is impulse wave. You know that.
Yep.
And this one is
Corrective.
corrective wave. What is this? Corrective wave. Very simple. So the characteristics of now, what are the characteristics of uptrend? Okay, uptrend. I will tell you. Uptrend has right. Uptrend
Yep.
has higher highs and higher lows. This is first one. The second one, impulse wave has increasing volume and spread or range. This is another characteristic. Corrective wave have decreasing volume and spread. Right? Right? Are you there?
Yeah. Yeah. I'm here. I'm here.
Yeah. Okay. How about this? Do you understand this point?
Yes. Yes.
Okay. Now, if I want to show you on the chart, okay. Sorry. Let me show you on the chart. Okay. So let's do. Okay. This one here. The up wave. If you are just using the up wave here, you will see that we have increasing volume. Down wave, when we are going down here, you can see down wave has decreasing volume. Can you see?
Yep.
Oh, sorry. This is known as corrective wave. This impulsive wave. Got it? And then corrective impulsive wave. You can see impulsive wave here got increasing volume, impulsive wave, and corrective wave here again decreasing volume. Okay, and then impulsive wave increasing volume, and then corrective wave decreasing volume. Can you see? Impulse wave increasing volume. Got it? Increasing, and then you have a corrective wave decreasing volume. Got it? And what happens here? What happens here? We still have an increasing volume, and then suddenly, what we see here, the price is moving in a range, and then the price, this was last low, this was the last major high. So this one is higher low. This one is also higher. Am I right? The last higher. Right? This higher low was actually broken here. So this will become what? Lower low. Can you see? Higher low is turning to lower low. What does it show you? It tells you that uptrend is changing into a downtrend. And can you see one thing here? Can you see one thing here? When you go down here, you see the volume here for uptrend increase. But as you go up here in a corrective way, what happens to the volume? Decrease. Can you see?
Decrease.
So what does it tell you?
Yes.
It tells you that uptrend has changed into a downtrend. So what I will do in such situation, I will go short trade. I'll place a short trade, my stop loss will be here, and then I will go down 3 hours. Okay, 3 hours. So this will be my target. So this will take around how many minutes? 2 minutes. So this will take around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 17, 2, 17, 30. That's like 30, 34. In 34 minutes, I will make 3.29%. This is 1.5. And I'm done for a day. Got it?
Got it.
Okay. So this is what happens. So you see how the volume of uptrend and downtrend. So we have covered this volume now. Similarly, we have another thing for downtrend. Now, if you are going to talk about a downtrend, okay. Now, if you are in a downtrend, you know we have this structure here. All right, downtrend. Okay, so this one is, let's suppose, initial high. This one is initial low. Got it? This one is lower high, lower low, lower high, lower low. Got it, right?
Yep.
So the characteristics of downtrend is tell me what are the characteristics of downtrend. Number one, we have series of lower highs and lower lows. Am I right?
Low.
Okay. Second characteristic.
Yeah.
Volume increases on impulsive down. Volume and spread. I will explain you what is spread now. Okay, impulsive down. Third, volume decreases, volume and spread decreases impulsive up, sorry, corrective up. Got it?
Yeah, got it.
So you can see, if I want to show you here, okay. Let me show you on the chart. Okay, So we have a downtrend here. You can see here. Initially, the volume is just stable as the price goes up. Got it? Stable. Okay. And now, as we go up here, what happens here? From the up here, you see decrease in volume. All right, decrease in volume here. And now the price is here. We have a consistent low volume, consistent high volume here. As the price going up, okay. As the price goes up, what happens? Now we have a increasing and decreasing volume. So what we can do, if you are unable to identify high and down move, okay, got it? We have an indicator here. We call it as wise wave. It will help you to identify the wave of this. Okay? The wise wave will help you to identify the volume of impulsive and corrective. Got it?
Okay. Okay.
Okay, so there's another indicator which we will use in our strategy, which is known as wise wave. So it was quoted by my mentor, David Weiss. Okay. By Lazy Bear, you will see by Lazy Bear. If you can see the name of Lazy Bear, let me Lazy Bear here. Okay, Lazy Bear. Now this wise wave is very powerful because it tells you the direction of. Okay, got it. Now you see here. What do we see here? As the price goes up here, the price increases. Now you see, we have an increasing move here, move down, good volume. Got it? And now what happens? We have a reaction to the upside, low volume. Can you see? Can you see the volume here?
Yeah.
Low volume. Got it? Low volume. And then we have good volume. And then down wave, low volume. Low volume. Up wave, low volume. Down wave, we go down, we have increased volume. Got it? And then we have up, down wave, we have increased volume. Up wave, low volume. And now suddenly what happens? This is now, what do we see here? This reactionary move, this one, impulsive move, okay, that like the down wave becomes smaller. Can you see? And up move suddenly becomes higher. What does it tell you? It tells you that uptrend is actually changing. Same thing happens over here. You can see on the volume chart. Volumes suddenly started increasing. On the Y wave, it's visible. The last wave, this one is the impulsive because we are in a downtrend. We are here in a downtrend. So this red wave is impulsive wave, green wave is corrective wave. Got it? So throughout this wave volume. So what is wave volume? Wave volume, what will happen? It will calculate and add all of the, this is a cumulative wave. We call it as cumulative wave. I think you know what is cumulative. Cumulative wave volume is the volume of all preceding bars. This one, this one, this one, this one. So all impulse wave, and this will be the last. This will be the volume. If we add all the volume, we will get what is all the volume in the corrective wave, all the volume in the impulsive wave. Got it? But suddenly we have what happened? Now the volume of corrective wave. Now what I can see from here, from the indicator, volume of corrective wave becomes larger than volume of impulsive wave. Am I right?
Yeah.
What does it tell you? It tells you that downtrend is losing momentum and bulls are overpowering bears. Soon an uptrend will start. Got it? So let's suppose if you are in a short trade, for example, you sold here You sold right over here, and you see these kinds of warning here, like this part, where the impulsive wave. You should close your position right over here, because this down wave, this wave, this volume of the corrective wave becomes larger than the volume of the impulsive wave. So you must exit your position here. If you keep on trading, you will lose money, because here the market is reversed. So this is also known as an exit indicator. But it tells you when the market conditions are changing and you must exit your trade. Okay,
Okay.
got it? Okay, all right. Now you see, if I hold onto my trade, so what will happen? My winning trade would become a losing trade. Got it?
Okay.
Yeah. So you see, it was so after this thing, what happened? What did you see? It's a huge uptrend, huge uptrend. Can you see?
Yes. Yes.
Just right after this move, this move gave me an early indication. This whole move. Got it? And now what you will see, and there's one more thing. Now, if you draw the Wyckoff structure, from here, okay, you will see an impressive thing. The market becomes oversold. Can you see?
Yes. Yes.
The market becomes oversold. We have a high volume on the bottom. You can see over here, a high volume on oversold. So this is selling climax. Okay. And then the volume of the up move, okay, the up wave volume like this is greater than the last impulsive wave. Can you see? And now if
Yes.
we draw the test line, if we draw a line of support from here to here, and we wait for the market to come and to come back and retest this area, would go long. So we have all, if we combine this structure plus this volume plus this wise wave, we will get a perfect trade opportunity. Okay.
Okay.
So the last volume, the last high volume was observed right over here. Where was the last high volume observed in this chart? Right, this one, right over here. So I can confidently place this position. I would say that I can place my stop loss here. This would be my last position to exit my trade. So how much? 4.43%. This is the maximum way a trade will move. Got it? And I will achieve this target. But what I told you, once you are in the trade, you should only target 3 bars. Am I right? So I will get out with only 3 bars. My 3R was achieved right over here. So rather than going all the way long, yes, I can exit over here. But as soon as I achieve the 3R, I will get out of that trade. Got it?
All right. Got it.
And it's a huge up. Now you see what is changing here. Can you see here? What's changing here? What happens here? We are in uptrend, and now the corrective wave, okay, because we are in an uptrend, okay, the down wave is a corrective wave, okay, and up wave is an impulsive wave. Am I right?
Yes. Correct.
Okay. Now the corrective wave volume on the wise wave becomes larger than the impulsive wave. Am I right? What does it tell you? What does it tell you? It tells you that the market will reverse. Now, if I open, and you can also see the huge volume, huge volume, reverse volume, huge reverse volume. So what will happen when the market opens on Monday? You will see, and you can easily see the market crash. You got it? The market will crash all the way to this side. So the people, okay, like the banks and like the big banks, they have already positioned their trade like this. They have placed their stop loss here, and they have already placed their target. They are already into the trade. And what will happen? They have put huge orders. So retail trader will say, oh, it's already uptrend. Now, if you remove volume and everything, you will say, oh, it's an uptrend, I will still buy. Am I right?
Yeah,
You will
correct.
keep on buying it. You will say, oh, this is an uptrend here. This is the previous resistance, this is support. So once the price closes above, right over here, you will still buy. So people will buy over here. So what happens? Once the people buy, the market came, the market went into their favor a little bit. Can you see? When the people bought over here, the market went up and then crashed down hitting their stop loss. Now people will buy still over here, the market will go up and then will crash down. And then market will start making higher lows, and will go down all the way to this side. Got it?
Yep, we got it.
Yeah, because we don't have a volume. Now, if we add volume to this, you see how much information and sense this chart makes with the volume. Right?
Okay.
Yeah, okay. So if you draw another one, if you draw the structure over here, for example, if I want to draw the structure over here, okay. From this chart, I'm drawing the structure over here. And I draw the Wyckoff structure, which is right over here. 2 point here, 1 point, 2 point, right? And I cannot see overthrows, but I can see as we are going up, the price here, you can see here. You in the shortening of the thrust, what you will see, this is shortening of the thrust, as I told you. The price is going up and then the price will make less and less progress to the upside. This is known as shortening of the thrust. I think I told you. Remember?
Yeah, but
Okay, now you see this ding bar, this bar is consistently going up and up. But here, you see what is changing? Something is changing here. Can you see? On the highs, something is changing. From here, it was going consistently up. From here, it's making less and less progress to the upside. So what I can do, I can make a shortening of the thrust. I can draw these two lines. I can join this high and this high with a trend line. And then here, this is my short position. I know that this is the point where I can take my short. This point. So this is the point because this was a shorting of thrust. So this is overbought. What is this? This is overbought. Am I right? This point.
yes.
Overbought, and I can draw a straight line from here to there. And as I close down to this point, I know that I can take the stage. Got it? By reading the volume and all of these things, I can take my short trade. If I have taken my short trade right over here, many people who are good traders, what they have taken, they have already taken the short trade, and you see, they've already made 3R even before the market opens the next day. 3.91 R. Got it?
Got it.
Yeah. So now so what they will do, they have made 3.1 R, so they have sold. They have moved their stop loss. Initially, the stop loss is here. Can you see this is the stop loss here? This was the stop loss level. Okay, now they have moved their stop loss. They have moved their stop loss to this point. They have locked in the profits. Now, this is their asset. Now, even if the market reverses against that, they will make 2%. Got it? They will make 2%. And if the market goes in their favor, they will make 10%. Can you see the difference?
Yeah, yes.
This is what I did in this chart. As I told you, right over here in this chart. I bought here, I locked in profit. I bought here, I moved my stop loss up. I bought here, okay, means I bought initially here, I moved my stop loss. I kept on moving my profit stop loss up as the market moved in my favor. Okay, as the market moved in my favor. And then suddenly on this candle, I was stopped out. So actually, I was stopped right over on this candle. This is my last point where I was stopped out. Got it?
Okay.
Yeah. All right. So understanding the histogram average volume, identifying normally, we have done this normally. Okay, the understanding the bar spread, actual volume and actual bar spread during uptrend, downtrend, accumulation, and reaccumulation. Now, we have covered already uptrend and downtrend. You already know that during an uptrend, impulsive wave will have higher volume, increasing volume, and the corrective wave will have decreasing volume. And you will use the wise wave to identify. Got it? You can see here. As we go up, you see here the volume here. Okay. very high. As we go down, you can see the volume decreased. As we go up, increased. As we go down, decreased, because we are in a uptrend. As we go up, increased. As we go down, decreased. As we go up here, we have a decreased volume. And now you can see from here. Can you see? Can you see from here, from this point? The corrective wave is having a larger volume than the impulsive wave. Can you see?
Yeah. Okay.
This is the point where you will say, where you will confidently say that you will assume that uptrend is changing into a down. And this is what happens. This was an early indication, uptrend. So if we got an early indication right over here, a good trader, smart traders, always they got early indication right over here on this point, when the impulsive wave volume was lower than the corrective wave. This was the point where the smart traders will know that they will no longer take long trades. They will only look for short trades or sell trades. Got it?
All right. Got it.
Any confusion so far?
So far, so good.
Okay, good. And if you combine, as I told you, if you combine this entire move, starting from here to here, if you combine it with this trend line and you draw the channel, as I told you, what you will see here an overbought condition. Can you see? Overbought. Now this is overbought, but overbought will only complete once the market returns back to the trading range. This is the completion of overbought, and then the market will come back and retest. Got it? And then market will crash.
Got it. Got it.
Okay, as I told you before, that some people will just start selling like this. For example, if something is the overbought, okay, this is overbought, let's suppose. And now here, so people will think this is overbought. This overbought will only complete once this price, once it closes down this channel. Got it?
Got it. Got it.
Only then we will say that overbought has completed. Because oftentimes what happens, sometimes what happens, that this overbought is not completed. Okay, it comes down like this, and then it keeps on moving higher. So people who short here will lose money. Got it? And it keeps
Yep,
on
got
higher.
it.
So what happens? This overbought and this overbought. You get one channel, you get another channel, and then you got overbought of this channel, and then market reverse. After overbought of this channel, the market reverse. This is the situation which occurs very often. Let me see, like here. Like here. See here.
Okay.
Yeah. There was
Wait,
no overbought. Sorry?
Wait, are you at the chart? Are you at the chart?
Yeah, I'm at the top.
The
Yeah.
screen is not changing it.
Can you see my screen?
Okay. Okay. Yep.
Okay. So you see here. So many people will say, okay, this is overbought. But this overbought, what happens? This overbought did not complete. It did not close inside the range. This is not an overbought. Got it? As I told you, the overbought much comes below and close above.
This should be oversell, is it?
Sorry, oversold. This is not oversold. Okay, as I told you, the oversold must come below the price. There should be red bars coming below and then closing up.
Oh, a red bar, not the bullish bar.
No, not the bullish bar.
Okay.
Now this is overbought. Yes. Close down and then close above. It's overbought. Okay. Now, if you combine the whole structure like this, now if you join this structure and this structure, this overbought. Now you see huge volume. Got it? So overbought should also have a huge volume. Okay. As I told you, one characteristics of overbought. There are two characteristics of overbought. What is one characteristic? One is that the price should come below here. Got it? It should close here. So you might say, okay, this is an overbought. It's not actually. Why? Because we should see huge declining power. As I told you, we should see huge, volatile trend towards the end of the trend. Do you remember
Okay.
the volatile?
Okay. Yeah.
The volatile trend. If you should see increase in volume and increase in volume and increase in spread, plus you should also see the overbought like this. Only then we can say it's overbought once it's complete. So you need to understand what is overbought. You will see high volume, plus you will see increase in spreads and range of the bar. You will see increase in volume, a huge increase in volume, and you will see that then you draw the bar like this, like when you draw the channel like this, you will see overbought. You will see the market just comes over here and then closes up. This is overbought, oversold. Got it? The same thing goes for the overbought.
All right. Got it.
Okay. All right. Now, for example, here, you see, yeah, this is overbought. This is overbought. Why? Because as I told you that these are very small range bar. But here, suddenly the range of the bar increase, volume climaxes, volume increase. This is overbought. If you draw the channel like this, you will see. Got it?
Yep. Got it.
Yeah. Now, if you draw this channel here, is this overbought? Is it overbought?
Oversold, I think.
Yeah, sorry, oversold. This is oversold. This is not oversold. Why? Because the price did not close above. It just goes above here and then reverse. Got it?
Yeah.
Okay. I told you the price should go significantly to the upside and then reverse. Plus, there should be increase in spread and bar. You see that increase very average bar, very average bar. There's certain increase in bar. Volume is also increased, but it's not consistent increase. Can you see? But here, if you see this overbought, this one, you see the bar size is increasing, consistent. Can you see? And volume is also increasing.
Okay.
This is oversold. This is oversold. Okay. So all you have to do is just to first of all, you need to draw this. Got it? Swing point. Now this and this swing point did not produce a good oversold. So this now we can rejoin the points here again. Here to here. Okay. Now if you draw the channel like this, now we can see the oversold. The first channel failed. It was no longer oversold. Got it?
Okay. Got it.
Yeah. Then even if for example, even if you're drawing the channel like this, for example, you draw the channel like this and you identified this as an oversold. Let's suppose you say, okay, this is oversold. Okay. Now what you will do, oversold, you will draw the channel like this, right? Now this oversold, when you draw this, okay, it must come back and retest. Okay. It must come
Okay.
back and retest here. But what did you see? The price goes and hit this level, and from here, from the oversold, from this line, it reverses again. So what does it show you? It tells you that oversold has failed. Got it? Because if this oversold was successful, it should go above this line, and then come back and retest and go. Am I right? So in this situation, once if this situation has failed, what you will do, you will draw and readjust the line. You will draw and readjust the channel. How you will draw? Very simple. You will just draw again from here. For example, this was my first initial drawing. Now I will draw. Now I join my this one to this one, right? To draw this channel, right? Now I will draw. I will draw from this swing point to this swing point, my next meeting. Got it? I will redraw it and remove the old one. And now I will redraw the channel again and I will draw it. Now I can see clearly I have seen the overbought, huge volume, reversed. Got it? And this finally, once we reversed, we also broke down this level. Can you see? We also broke down this supply line. And once we broke down the supply line, we can wait for the retest here and we can go up. Got it?
Okay, got it.
Yeah. Now, again, as we are going up, for example, I have entered my trade here. Now I see I can draw another channel from here and here. I have two things, and my target is here. For example, I'm here. Okay, I am here at this point. The market is still moving, and I can see that I have got this low and this low. I can easily draw the channel here like this, and I can draw like this. I can extend it and draw this. Now it shows me that if I am here, I must exit my trade right at this point, somewhere there, as the market reverses. So first when I see this first bearish candle right over here, I will close my trade. Got it?
Okay.
Yeah. This is a signal for me. And the second thing I see here, what did I see here? Is this one. Okay. Now we have impulsive wave. We have this one, corrective wave, and now we can see the impulsive wave volume has become lower than the corrective wave. This is a signal that the price is different. Am I right?
Okay. Okay.
Yeah. So I will exit my trade right. So initially, I have already achieved. At this point, I have already achieved. A good trader will always exit over here, 3%. But let's suppose if you're going for a much higher risk to reward ratio, you must exit your trade right here. At this point. Once you see this condition. Okay.
All right.
Okay. Now I will go for another one, which is accumulation volume. Okay. Accumulation volume is, let's suppose if you have an accumulation, as I told you, all right, the volume structure in an accumulation is very simple. If there is an accumulation, this is accumulation, the market goes up here, goes down, goes up, goes down. Got it? Then it goes up. So this is actually an accumulation. Am I right?
Okay.
Okay. During accumulation process, you will see that volume will actually decrease. Throughout the accumulation process, the volume will decrease. Here at this point, it will be highest. At here, it will be lowest. Got it? It will decrease. And then suddenly on the breakout, once the price breaks out of this, the volume will increase. Okay.
All right.
Or you can have second situation. The second situation is like this. This is situation one. This is situation two. Situation two is like this. For example, you have an accumulation here. Okay. All right. So throughout the market here, you can see that the volume will decrease. Got it? As we progress from here, it will be highest. As we go here, from here to here, the volume is decreasing. Got it? And as we go down,
Got it.
I
Got
told
it.
you, as we go down here, and then we make a false break and go up. This is what we call it, fake breakout. Got it?
Yep.
During a fake breakout, the volume will also increase. The volume will also increase during the fake breakout. Okay, this is at the breakout and at the fake out. At the fake breakout. In both situations, the volume will increase during accumulation. Okay.
Yep. Good.
I can show you on charts. Okay, let's show me on chart. Let's suppose here. Where's the accumulation process? Let me move. Okay. You see, this is accumulation. Now, if I draw this channel here, what do you see? During initially, the volume was very high, and as we go further into the range, the volume will decrease. Can you see?
Yeah.
Yeah, and as we break out of this range, what happens? The volume increases. Can you see? So you will see this kind of pattern. The volume will decrease and then it will increase during the break, like U shape. Got it?
Okay. Yep.
This
Got it.
is a typical volume structure for the accumulation. So when you see this kind of pattern, you should know that this is accumulation. And let me show you accumulation again here. This is again accumulation. Accumulation here. So what do you see here? During initial, the volume was high, and then as we go further into the range, the volume decreases. During the breakout move, you can see breakout move, volume increases again. Can you see? So you have this U shape. Can you see?
Okay. Okay.
All right. Let me show you another accumulation. Okay, here as well, you see accumulation. The volume here decreases, and then there was sudden increase, and then the volume here decreases. Can you see? Decrease throughout
Yeah.
the range.
Yeah.
It decreases. Only this here it was only this was anomaly here. Okay, and then what happens at the fake breakout? This is a fake breakout. All right, the volume increased a bit, and during the breakout, what happens? We see increased volume. Can you see the U shape? Can
Yeah.
you see the
See
U
it.
shape? This is U-shaped structure is the accumulation. Got it? Okay.
Yep.
I'll
Got
show
it.
you
Got it.
again. As I told you, let's suppose this is what? This is reaccumulation. What is reaccumulation?
Yep.
So as I told you, accumulation and reaccumulation will have a V shape. Accumulation and reaccumulation. I think I told you what is different between accumulation and reaccumulation.
Yeah. Yeah. Got it.
Reaccumulation occurs within an uptrend. The uptrend, and this is reaccumulation. Got it? And goes up. And what you see structure here, high volume, price decreases. You see as the price progress through it. And as we have a spring, can you see a fake breakout here? It increased volume. Increased volume and a fake breakout. Can you see increased volume? It's a fake breakout.
Yeah.
This is fake breakout,
Okay.
and during a
Okay.
fake breakout, we have an increased volume. And then this fake breakout is also known as spring. as I told you. Remember? A spring. And if it's on the top, what we call it? Upthrust. Remember?
Yeah. Okay.
Okay. During the spring process, we see increased volume, and you can see this U shape. Okay. And then as we go up again, we decrease it. And as we break out, can you see breakout here? We again increase in volume, U shape. So this is reaccumulation process. Got it? This is here as well. This is reaccumulation.
Okay. Okay.
This is also reaccumulation. Why this is reaccumulation? This one here,
Because it's ranging.
it's ranging, and you can see this pattern. Can you see? Pattern. As we break out over here, what do we see? Increased volume. Now, first we are decreasing, and then at the breakout or during the fake breakout, we will see increasing volume. Can you see?
Yes. Yeah.
So this pattern, now many people will think, okay, might be this is distribution. So many people are waiting for the market to reverse from here. There is no point to think for the market to reverse. By seeing this volume, we should know that the market will go up. So all we need to do, either we need to wait for the breakout or spring, or we can wait for the test here. The second time, once the market breaks out, goes above and tests here. This is the opportunity for us. This one, this key reversal. Can you see this key reversal?
Yes. Yeah.
This key reversal is our way, is our opportunity to buy the market. Here we will buy here, and this will be a big trade, a huge trade. Got it?
Okay.
Yeah. Now, let's go for another one. So as I told you, when accumulation and reaccumulation have similar volume structure, similarly, distribution and redistribution will have similar volume. They will have the same volume distribution, same volume shape. Similar volume profile. Got it? Distribution and redistribution will have similar volume. Now let me do you understand?
Yeah. All good.
Okay. Okay. Now let me show you again if we have a redistribution. For example, now we have another situation. We call it as a redistribution. This one tells me, okay. Now we are going up, okay, and now we are here. This is second situation. Now, can you tell me which one is okay? A, B. Can you tell me which one is distribution and which one is redistribution?
A is distribution.
B is redistribution, right?
Yeah.
Yeah, easy. Got it. Okay, so during this distribution and redistribution process, you will see volume like this, like this, and then sudden increase in volume, then decrease in volume, then sudden. You see, irregular. You will consistently see these kinds of irregular high volume. When you will see high volume, you will see high volume, especially when the market reaches the here at the top, and when the market reaches the bottom. You will see high volume. Got it? So once you see high volume at the tops and bottoms, it shows you that the market is, that this is distribution. The same thing goes for the redistribution. Got it?
Yep. Okay.
Okay. As the market reaches tops and bottoms of the range, you will see unexpected high volume. You see here high volume. You will see high volume at the top side. You will see high volume at the bottom side. Got it? These swings highs and swings lows will have high volume. Okay, irregular pattern. Got it?
Got it.
So this shows us that this is actually this range, this trading range is actually a distribution and redistribution. So I think now you got an idea how to identify and differentiate between distribution and accumulation and distribution, or reaccumulation is
Yep.
redistribution. Got it? Yeah. For example, let me show you a distribution now. Okay, this one here. Okay. As the price, the low side, you can see high volume. High side, high volume. Low side, high volume. High volume on the top. Downside here again, increase in volume. On the downside, you can see. Okay, and then as we approach up, okay, we see again higher volume and the market reverse. Can you see?
Okay. Yeah. See.
Yeah, this is high and low volume. So let me show you another distribution here. See, here at the bottom, top volume, high volume. Okay, and then as we go up here, this is resting here. It's again high volume here. As you go up, similarly, you see increase in volume, very small increase in volume, but there will be increase in volume. Got it? As you go down here, again, you see increase in volume at the bottom. Can you see? And as you go up here again, you will see here again, increase in volume at the top. You see here at the top here, increase in volume. So this is distribution. Okay, here as well, you will see the same thing here. If you draw this channel here, what happens here? High volume. As we go down, you see here, low volume at the bottom. As we go down, low volume here, high volume. Can you see? Consistently. Here as well, you see high volume here. Can you see? On swing points here, low volume, sorry, high volume on the one. And then here again. Now this one we have a low volume here because this one was actually what? Upthrust, the last point. So after the upthrust, the market fell down, reversed. Can you see? Can you see?
Okay.
Yeah. Now you see here again, high volume on top. You see low volume on bottom, swing low, swing high again, high volume. Can you see? And then this is a distribution pattern, and the market reversed. Can you see?
Yeah. Yeah.
Now, if I draw a broad range distribution, for example, if I draw this kind of structure here, a very huge broad range structure here, you will see here, high volume on top. As we go down, we have a diminishing volume, and then at the low, this is the lowest here, increase in volume at the lows. And then as we go up, what do we see? High volume on the top, and then you see, this is distribution. And then in the middle, you will see low volume. Got it?
Got it.
Yeah. Here as well, distribution. High volume at the bottom, and then on top, the last high volume, you can see high volume, consistently you can see high volume. Here you see distribution. Now compare this one. Okay, once you go high, what do you see? High volume on top, high volume on top. You see this bottom volume, this one, you see here, high volume. Can you see? And then as we go down here again, high volume on bottom. And then as we go up, high volume. Can you see?
Yep. Yeah.
But this high and low volume on swing highs and swing lows will make it as a this will tell us that it's distribution, because it's not making a V shape anymore, right? But that one, if you see accumulation is a little bit different. Now this is redistribution. This is redistribution. Can you see? Redistribution.
Yeah. Yeah.
Why this is redistribution, I will tell you. Now you see here, low volume at bottom. As we go up here again, you see this increased volume on top. You see low volume, high volume, right? And as we go on the bottom here, you can see high volume here, increase in volume. As we go on top again, we see increase in volume on top. As we go on bottom here again, we have increase in volume. You see, after here we see increase here, increase in volume here. Go see, got it? redistribution.
Got it. Got it.
Now you see here, this one here, redistribution again. Now this is bottom, you can see high volume. As we go up here, you see high up, we see consistent high volume on top. High volume on top. As we go down here again, you see this point, swing low with another high volume. As we go up, this one on top here, what do we see? Another increase in volume. As we go down, what do we see? Another increase in volume. Got it? Got it? Swing high,
Yep,
swing
got
low.
it.
So this is, but consistently, we do not have any pattern over here. We have like this now. You will see like this. Got it? But accumulation will have like this. Pattern. This one will have like this. The volume pattern. Got it? You see volume pattern.
All right.
But accumulation will have like cup, you know, cup, like a bowl shape.
Okay. Okay.
Yeah. Now this one, if you see here, what do we see? Now this is accumulation. You see how? I tell you, how is accumulation? You see here, we have a high volume on top here, then we decreased, right? We decreased, and then during the fake breakout, what do we see? Increase in volume. Can you see? Fake breakout, and then during a breakout here again, what do we see? Increase in volume. During breakout again, this is breakout again, increase in volume. Can you see?
Yeah.
You will
Yes.
see like this. If you see the shape, it will do like this. First and then V shape like this. Okay. Distribution, you see high volume on top and bottom, high volume on top and bottom. Distribution. This one is again a distribution, redistribution. This one accumulation, V shape. This one distribution. This one accumulation. I think you can easily see the patterns. This one, the volume increased because it was spring. What it was spring. After spring, when there's a breakout here, this point breakout, what do you see? Increasing volume. So you see, during this breakout,
Yep.
we see
Yeah.
increasing volume. Can you see the shape? Very easily. But now if you see here, this is distribution pattern. Increase volume, increase volume. It's just like this one. Profile, these profile. Got it?
Yeah. Yeah.
Here as well. There is no one shape here. See? See, can you see? Like this, or like this. You will have these kind of shapes in the distribution pattern. Accumulation, you see
Okay.
here, a very consistent approach to accumulation. And as we break out, you see increased volume. Can you easily identify now?
Yep.
Yeah.
Yep.
Okay, good. All right, now we are done with this. Understanding the variations of accumulation, reaccumulation, redistribution, distribution. Okay. Now the variation. Okay. Now variation of the markets are, now, for example, if we are in accumulation, as I told you, that if we are going up in an uptrend here, what is different between accumulation and distribution? So during an uptrend, so you see, this is generally an uptrend. This is uptrend, right? Uptrend,
Yep. Yep.
right? This is what? Redistribution, sorry, reaccumulation, and then it resumes the trend. And then it goes down here. The price makes equal highs and equal lows here. Random distribution highs and lows, and then after that, the market reverses. Right? So this is what? This is reaccumulation. This is distribution. Okay.
Yeah.
And this is, I told you before as well, So you will see this kind of structure in the market.
Redistribution.
Redistribution, and then the market will finally reverse from the bottom. Got it? This is accumulation.
Correct.
Right? Okay. So within, as we are going uptrend, right? As I told you before as well, a redistribution can have two kinds of shapes. Remember that. Number one, that you have an uptrend here, all right? Okay, now we have consistent redistribution. Okay, and then these are the variations of distribution. Okay, redistribution. Now this is reaccumulation,
Okay.
right? This is first type. This is
Yeah.
type 1. The second type can be like this, as I told you before. Got it? This is type 1, this is type 2. Either we have a redistribution, horizontal range, or we will have a descending range for accumulation, for this one, reaccumulation. Got it? Why? As I told you before as well. Remember that if our range is descending range, my question is, can you tell me?
Sure.
If a range is descending, then its bias will be bullish or bearish. This is descending range.
Bearish.
Hmm?
Bearish.
No, it will be bullish. Why? I tell you. Bias means, what is bias? Bias means what will happen next. So what will happen next, I will tell you. Maybe it becomes oversold here and reverse. Am I right? Or it makes a shortening of thrust and reverse. Right or wrong?
Yeah, correct.
So descending range will have very bullish bias. Okay, it will ultimately go up. So that's why this is our main trend. And once we see this, you will see this kind of range. Got it? So you have to remember these functions here for the bullish bias. I will draw some kind of distribution, variation or distribution. So first variation is this one. We call it as ascending triangle. Now tell me the bias of this one, okay? Ascending triangle is like this. This one. This is bullish or bearish?
Bearish.
This is bullish. I tell you why. Because if you keep on seeing high lows, you see, lows are building pressure to the upside. Am I right? Lows are increasing to the upside. But if you see the highs are same. So what is happening? The pressure is building to the upside. So this resistance will ultimately break and price go up. Got it?
Okay.
Similarly, if you have this channel here, the price is coming down like this. Okay, so what is happening? Do you see? It's building pressure to the upside, but on the highs is same pressure. Got it? So it will ultimately go to the upside, to break to the upside. So it is bullish bias. So ascending triangle. Now we have a descending triangle, opposite of this one. Okay. So what will happen? This is bearish bias. Why? Why this is bearish bias? Because the lows are decreasing. The lows, the highs are building pressure to the downside. Can you see? But the lows have consistent. They are consistent. So what will happen? They are building the pressure to the downside. This is consistent. So what will happen? It will ultimately break down. Got it?
Okay.
Okay. So these patterns you can learn online. You can easily. There you can see here. If you write down chart patterns, cheat sheet, chart pattern cheat sheet, you can got it. You can see. You see trading pattern cheat sheet. Open this. You can see.
Okay.
Let me give you another one. Yeah, here. Reverse the chart pattern. See here. See, if you have like this in the top, the price will go down. Top, price will go down. If you have to the like this one, it will go down, down, down. Can you see? Triangle up. I think I can give you a better one. See here. See here. Can you see? This one, the lows are increasing. Can you see?
Yeah.
See, the lows are increasing here, so it's bullish. This one pattern, bearish. This one, bullish, bearish. Got it? This one, you see, ascending. I told you when the channel is going down, it will have a bullish one. So this is bullish continuation pattern. Here, you see this channel, we call it as bullish wedge. When we have an uptrend like this, and then the price suddenly makes a retracement, which is a redistribution, or sorry, reaccumulation, as I showed you on chart, it will have a bullish implication. Got it?
Yeah, but
This one here as well, bearish. You see, so these are chart patterns which you can learn. You can just you don't have to learn it, you just have to understand it. Okay.
okay.
Yeah. For example, I told you this one here. This one. This is a chart pattern. As I showed you before as well. This one pattern. You should know that this one is bearish or bullish. If you see this pattern over here. So you have to learn these common patterns. Can you see here? This one.
Okay.
Yeah. Sorry. See here. Goes down, up, down. Can you see?
Okay.
Yeah. So I will provide you with a cheat sheet. You can just see it and you can watch on the charts, and then you will understand which direction it will go. But again, if you combine this with volume, then you will understand the process. Got it? For example, here, this one.
Right.
Yeah, see here, this pattern, rising wedge. Can you see this pattern here? Certainly on the top, certainly on the top. This one, which I identified this one. So this one will be, as I told you, the downside. If it's up like this, it will be down. If it's down like this, it will immediately revert to the upside. Got it?
Yep.
Yeah. Okay. Now I told you, let me show you another thing. Now, sometimes the pattern are like this. Now, what do you see? This is neutral pattern. We call it neutral pattern. Okay. We call it neutral pattern because the price is building pressure from the upside. It's going higher. The price is also building from the lower side. So this is neutral pattern. Okay, but if you see the volume structure here, high volume on top and bottom as well, high volume, and the top high volume, what does it show you? This neutral pattern is actually a distribution, redistribution. Got it?
Yeah, got it.
So even on a neutral pattern, you can also identify the direction of the neutral pattern by using the volume profile. For example, this one, as I told you, this was supposed to have a downtrend now. You see, this was the channel. So I told you that if you see this kind of channel, the price will reverse down. But if you see the volumes profile, it says a different thing. You see? So that's why this says a different thing. Can you see?
Okay. Okay.
Yeah.
Yep.
So
Okay.
this was so many people will see the chart patterns. They will say like this, okay, this is a chart pattern here. This one here, it should go up. It should go up. But exactly what happened? This is going up. We were expecting the price to reverse, but what happened? The price continued to go up. Why? Because we are seeing that the accumulation pattern over here. Can you see the U shape, high volume, spring, and as the price breaks this, we have a increased volume on the breakout, and we have an increased volume on the spring points. Can you see? So this
Yep.
was actually this is actually a reaccumulation. Sorry, accumulation process. Okay. And if you want to do one more thing, you can also identify for your ease. For example, if you're having a hard time identifying the volume, you can use a Y phase, as I told you. You can combine both of the indicators together to read the volume. Now you see how things will be easier.
Yeah. Okay.
Wait, hold on. Direction measure to 1. Now you see. Can you see? On spring point, increased volume here. Here decreased, and then on breakout, increase. Can you see?
Yes.
Can you see the pattern?
Yeah, I see it. I see it.
Yeah. How about this one? A redistribution, as I told you. Now, if I want to draw this channel here, what I will do, I will draw this part and this part, right? I will draw, and then I will draw a channel like this. So this was already what? What do we call it? Oversold. Am I right?
Yeah, correct.
Oversold. And how about the volume structure here? High volume on top, low volume here, a very high volume, and then high volume on top again, then high volume on the this one bottom. Do you see irregular? Do you see it, right? And once you combine it further, and after I see the whole profile, what do I see here? Decrease volume, and then suddenly on increase here. You see U shape. Suddenly on the breakout here, what do we see? Increase volume. And then this is spring. You see spring, huge volume on the spring. Can you see? You see
Yep,
U
yep.
shape, U shape. Can you see? In both patterns, it's U shape. And on the spring, it's high volume. On the breakout, it's high volume. On the breakout, it's high volume. This is accumulation, reaccumulation. Now, but you see this one, this one. This is reaccumulation or distribution. How about this one, this pattern? Can you see U shape here? Breakout, huge volume.
Yes.
Yeah. Okay. In the same way, we can identify the structure of volume. So what you have to do, I will tell you in further videos, okay, how you can combine everything together. But first of all, what I wanted to explain you in this video, I think you have already understand the structure of the Wyckoff, the structure of distribution and accumulation. Okay.
Yeah.
During accumulation, the price will actually have this kind of behavior. Okay. All right. And then during breakout, it will increase, or during spring, it will increase the volume. For example, if we have this one here, so you will have this kind of volume. S shape during breakout. This volume, initially it will have high volume, and at the breakout, it will have high volume. Got it?
Yep. Sounds good.
Or we have another one as well. For example, we have this one here. Spring, take breakout, and then so we'll have this kind of volume, high volume, and then it will keep on decreasing during the spring. We'll have another high volume, and then we will keep on increasing, and during the breakout, we'll have another high volume. Got it? S shape. First S shape, the second S shape. Got it?
All right, got it.
Yeah. During distribution is very different. I told you distribution or redistribution, you'll have these kind of high volume, and then the price goes up, and then high volume on top, high volume on top, high volume on bottom. Got it? Then high volume here, this one here, and then high volume on top. Got it? Like this. Irregular pattern. High volume on tops and bottoms. Got it? On swing highs and swing lows. This is
Okay.
That's all you have to remember. All right, so reading the market wave by wave. I've already told you how to read the market wave by wave in terms of buying climax, impulsive wave, corrective wave. Did I tell you?
Not yet, I think.
Okay, reading market wave by wave. I think I told you already. I told you that when we are in an uptrend, okay, the impulsive wave will be higher. Got it? Will increase. Okay, the corrective wave will decrease. Impulsive wave will increase. Corrective wave will decrease. Impulsive wave will increase. Can you see? Got it? Impulsive wave will increase. Corrective wave decrease. Impulsive wave 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 increase. And corrective decrease. And then suddenly impulsive will decrease. And then what will happen? We will see this increase in impulsive wave and decrease in corrective wave. This is known as changing in market direction, changing in direction. You see, increase in impulsive wave, decrease in increase in volume of the impulsive wave, decrease in the volume of the corrective wave. Okay, this is what happens during uptrend. But when we see the decrease in volume of the impulsive wave, but increase in volume of the corrective wave, what do we notice? Like here, we know that the market is changing condition, right? The price is going to reverse. All right. So this is a very short reverse.
Okay.
Okay. Yeah. Got it? Any problem?
No.
Okay. Now, should I continue now, or you want to continue later? This one, or you take some rest and then.
Let's continue later.
Okay, that's very later. So I've covered almost 20 learning outcomes. This week's everything is done. So maybe we will join again in the morning. Sorry, in the evening, and then we can
Yeah.
cover these 2 or 3. Okay, got it?
All right, got it.
Because this is the main part now. Okay? Selling climax, buying climax, shortening of the upward thrust, overbought, oversold. I think I've already told you, gapping through demand. So these are some of the bars and terms which you need to learn. And then now we are actually moving to the Wyckoff deeply. And then I will show you how to combine everything in a structure in a Wyckoff. Got it?
All right.
So yeah, there are total 32 learning outcomes. We have done 20, so more than half is already covered. Okay. All right. Okay, sir. Let's finish the call now.
All right. Thank you, Will.
Okay. Bye-bye.
All right.